Fundamental analysis is a way to evaluate a company's financial health and future potential by examining its financial statements, management, industry, and other relevant factors. In layman's terms, it's like looking under the hood of a car to see how it's running and what its future potential might be. The goal of fundamental analysis is to determine the intrinsic value of a company and to compare it to its current market price to see if it's a good investment opportunity. This is done by analyzing a company's financial statements, such as its income statement and balance sheet, to see how much money it's making and how it's using its resources. Additionally, fundamental analysis involves looking at the company's management team, business model, and competition to assess its potential for long-term success. It also considers macroeconomic factors, such as interest rates and economic growth, that could impact the company's financial performance. Overall, fundamental analysis helps investors make informed decisions by providing a comprehensive picture of a company's financial health and future potential. Fundamental analysis is a method of evaluating a company's financial and economic health to determine its intrinsic value. Here are some steps to perform a fundamental analysis. 1. Study the company's financial statements. Look at the company's income statement, balance sheet, and cash flow statement to get a sense of its revenue, expenses, assets, liabilities, and cash flow. 2. Analyze the company's financial ratios. Look at key financial ratios such as the price-to-earnings ratio, debt-to-equity ratio, and return on equity to assess the company's profitability, financial leverage, and overall efficiency. 3. Evaluate the company's management and business model. Look at the company's management team, its business model, and its competitive advantages to assess its potential for long-term success. 4. Assess the company's industry and market position. Analyze the company's industry and competition to determine its position in the market and its potential for growth. 5. Consider macroeconomic and geopolitical factors. Look at macroeconomic indicators such as GDP, interest rates, and inflation, as well as geopolitical factors such as trade policy and natural disasters, to determine their potential impact on the company's financial performance. 6. Look for recent news and developments. Stay informed about the latest news and developments related to the company, including earnings reports, mergers and acquisitions, and regulatory changes. 7. Use consensus estimates. Analyze the consensus earnings estimates and revenue growth projections of financial analysts to get a sense of the market's expectations for the company's future performance. 8. Compare to peers. Compare the company's financials and metrics to those of its peers to see how it stacks up in the industry. 9. Check the company's dividend history. Look at the company's dividend history to see if it has a history of paying dividends and if it has been consistent in its dividend payments. 10. Valuation. Finally, use the information gathered in the previous steps to determine the company's intrinsic value. This can be done using methods such as discounted cash flow analysis or price-to-book ratio analysis. It's important to understand that fundamental analysis is a process, and it takes time and effort to perform a comprehensive analysis. It's also important to be objective and avoid making emotional decisions. Finally, remember that fundamental analysis is just one aspect of the investment process and should be combined with other forms of analysis and research to make informed investment decisions. Please consider subscribing our channel for more informative videos like this. See you.